So friends, what is divergence? So as the name suggests, in terms of stock market, in terms of stock market charting, it is simply, suppose the price is moving up and you are also using an indicator. Price is moving up, indicator is also moving up. So that is normal thing. But suppose price is moving up, but the indicator is not moving up. Indicator is making lows where price are making highs. So this is a divergence. This is a bearish divergence. Similarly, price is moving down, indicator is moving down. So that is a trend. Now price is moving down, indicator is not moving down. Price is making lows, indicator is not making lows. That is a divergence. This is a bullish divergence. So in this video guys, I'll show you how to trade the divergence. The divergence can be traded very perfectly. You can enter accurately using this divergence. I'll show you how you can trade the divergence. The divergence trading is mainly for advanced traders, but I'll show you how even newbies can start using divergence. And these divergence tools are available on the Zerodha Kite. I'll show you more about that in Zerodha Kite. So in this video, I'll show you a step-by-step demonstration on how to use the divergence. So let us get over to the Zerodha Kite. But before that, this is the time first to subscribe to this channel. So now friends, let me show you the divergence trading in Zerodha Kite. So I believe you are already having a trading terminal and a charting platform with you. If you do not have any in front of you, I'll suggest you get Zerodha Kite. So I'll be giving you the link to open account in Zerodha in the video description. So from there you can open an account in Zerodha and you can get Zerodha Kite very fast. And Zerodha Kite is a super charting platform. So here you can use all the indicators, and very recently they have actually given the divergence indicators also. So let me start with the MACD divergence. So let me go to the studies, and here just below the MACD you will be getting the MACD divergence. So here anytime you will find the divergence, it will be shown on the chart. So let me minimize it. So now you can see, whenever you will see that the price is moving up but the MACD is not moving up, it is a bearish divergence. And if you see the price is moving down but the MACD is not moving down, it is a bullish divergence. So now if you see a bearish divergence, will you directly short sell? No. Actually you will wait for a trend line break. So you need to mix and match the divergence trading along with the trend line break. Now let me show you some examples. Suppose here you are getting a bearish divergence. So let me add a trend line. Suppose this is a line. Let me connect all the bottoms. So here you will not short sell until and unless you are getting a trend line break. So you can short sell over here. I am finding that this short sell has not done much, so all the trades will not be very profitable. Suppose here once again you have got a bearish divergence. So once again you draw a trend line. So unless and until you are getting a trend line break, so here you have got no trend line break, so you will not short sell the market. But here you have got a bullish divergence. So here you need to draw the trend line over here. So here you can see you have got a bullish divergence from here to here, and after you have got the trend line break, the market has seen a furious rally. So in this way you need to trade the divergences. Suppose here once again you have got a bearish divergence. Let me maximize these divergences a bit. You have got a bearish divergence. So you need to once again draw the trend line. Suppose you are drawing a trend line over here. So you have got a bearish divergence. Once you see a bearish divergence, you need to wait for the trend line break. Once you have got the trend line break, you can see the market has fallen a lot. So you need to mix and match the divergences along with the trend line break. let me delete the drawings. Now this was the MACD divergence. In the Zerodha they have given some other divergences also. Suppose there is a stochastic divergence. So let me go to stochastic divergence. Here once again you have seen that you are getting stochastic divergences, but you are not getting a trend line break, so you are not actually buying the market. Here you can see, once you have got the trend line break, after this divergence, once you have got the trend line break, then only you can actually buy the market. You have seen that you have got a big rally from here. But in case of these bearish divergences, unless and until you are getting a trend line break, you will not be short selling. So you will not be selling any of these bearish divergences. So in this way you can actually trade the stochastic divergence too. So you will be wait for the divergence and then you will be wait for a trend line break. Once you will get a trend line break, then only you can short sell or you can buy. Now there is another kind of divergence, that is the RSI divergence. Let me go to the RSI divergence. Here is the RSI divergence. Let me delete the stochastic divergence. Let me maximize. So here you have got a RSI bullish divergence. Once again you will be waiting for the trend line break. Once you are getting a trend line break, you will be buying. Here you have got bearish divergence, bearish divergence, bearish divergence, bearish divergence, bearish divergence. So unless and until you are getting a trend line break, you will not be short selling. So you can short sell only over here. I am seeing that this short sell has not done much, but once you get the trend line break, only after that you can short sell the market. And whenever you are entering the trade, you need to keep some stop loss and you need to keep some targets. So suppose you are short selling over here, suppose you are short selling over here because you have got a bearish divergence and you have got a trend line break, you need to keep the stop loss just above the last swing high and you need to keep a target of twice the stop loss. So if you get a 50-point stop loss, you keep a target of 100 points. Similarly, suppose you are buying over here because we have got a trend line break over here. So if you are buying here, you need to keep a stop loss over here below the last swing low. And once you are keeping the stop loss, suppose this is a 50-point stop loss, you keep a 100 points target. So your risk to reward should be 1:2. If you keep 1:2 risk to reward, there is high chance that you will be making good amount of profit if you have 50% or 40% win ratio too. So if you have low win ratio also, then also you are going to make money because your risk to reward is double. So in this way you can trade the divergences. Zerodha has automatically given you the divergences, so no need to check the divergence manually. So in this way you can trade the divergence in Zerodha. So guys, I feel you have understood how to trade this divergence. You can enter and exit using this divergence and you can actually mix and match with other indicators or trend lines. So guys, if you have any comments, if you have any questions, just ask me in this comment and I'll try to answer each and every comment. You have seen that I try to answer each and every comments, but if I cannot answer, if the comment is elaborative, I try to make a new videos. So do make comments, like this video, share with your friends, and if you are not yet subscribed to me in YouTube, I'll suggest you guys to subscribe to me first, because I do come up with this kind of videos twice a week. So hit the subscribe button and also do not forget to hit the bell icon, because in that case you will be getting my next video updates instantly. So guys, subscribe, like, share, until I come up with a new video. Bye bye.